Hello guys, how are you? Uh, in our last video, we discussed about asset is equals to capital plus liabilities, that is accounting equation, and a few examples. As Mr. Alex started his business, the introduction of capital and the effect of the transaction in the balance sheet and the journal entries, the purchase of an asset by check, and the purchase of an asset and the incurring of a liability. Just for a quick review, now today we take a few more examples. Now let's say the in our last example we discussed the purchase of an asset and incurring of a liability. Okay, and now sale of an asset on credit. Sale of an asset on credit on 10th of May 2021. Goods which cost $600 were sold to Mr. Peter for the same amount. The money to be paid later. Now the effect is a reduction in the stock of goods. Okay, the effect is a reduction in the stock of goods and creation of a new asset. Reduction in the stock of good and the creation of a new asset. Okay, how it is possible? Like a person who owed the business money is known as a person who owe the business money is known in accounting language as a debtor. Now the effect on May 10th 2021, goods which cost $600 were sold to Mr. Peter for the same amount. The money to be paid later. He will pay money after some time. The effect is a reduction in the stock of goods and creation of a new asset. A person, now this is the term, a person who owed the business money or to whom we sold goods on credit is a debtor, is our debtor. Okay, now the effect of in the balance sheet should be balance sheet as at 10th of May 2021. Assets amount. Okay, shop we purchased earlier 32,000. stock of goods, $6,400. Now the stock of goods is 6,400. In our previous example, now let's do a quick comparison. The effect of this transaction, as I told you, is the reduction in the stock of goods and creation of a new asset. So now stock of goods is $6,400. Previously it was, in the last transaction, it was $7,000. Now we made a sale on credit of amount 600. Okay, so it means 7,000 minus 600 is 6,400. Now there is a reduction in the stock of goods, and the debtor, here we introduced a new term, is a debtor, who will pay money in the future that we sold on credit to him, and is our asset. So debtor will be in how much? $600 in our receivable. This is our receivable, accounts receivable. Okay, now cash at bank. Cash at bank is 28,000. that is same as previously. Now the total is $67,000. Okay, less we will creditors to whom we owe the money. Okay, this is an opposite of debtor. So $7,000, 60,000, and the capital is still same, that is 60,000. So in the end, accounting equation is always same, that is asset is equals to liabilities plus capital. I hope you understand this entry, that is we sold goods on credit to our customer. He is our debtor, and it's our account receivable, and it will come in our asset column. That's, you can say, current asset. On May 10th 2021, goods which cost 600 were sold to Mr. Peter for the same amount, the money to be paid later. The effect is a reduction in the stock of goods and creation of a new asset. A person who owe the business, this is a term that we explain here. A person who owe the business money is known in accounting language as a debtor. Okay, the effect of this is stock of goods reduced by $600 and debtor receivables increased by $600. I hope you understand this entry, and the next entry will be that we'll be discussing in next video is sale of an asset for immediate payment. Sale of an asset for immediate payment. Thank you for watching this video, and let me know if it helps out in understanding the transactions, and please do like my video. Thank you very much.